Hello guys, so today point what are mutual funds? What are mutual funds? Mutual funds prove to be the collected the investment pools that are the managed professionally. They drive their sometimes enormous capitals from the contribution of the many the different the investor. These monies are then is invested in the variety of the investment or the securities comprised of the bonds, stocks, other the mutual funds, the money markets, and the commodities like silver and gold. Mutual funds all have a the funds manager. His responsibility to is to the sale and buy the holding of the fund according to the according to the guidelines according to the guidelines according to the guidelines out of the particular the mutual funds the prospectus us regulation the required that is the mutual funds the register with the governing sector or the securities and exchange commission commission Lucian Commission make the distribution of the particularly all of the income and the net gains the made from the selling and the securities to have is the invest the minimally once of the year of the majority of the this is the mutual funds are the furthermore Furthermore, the overseen the by the trusted of the boards or the director, there is a jobs about the maxes the certain that the fund of the properly the managed by the investment, the advisor of the investor of the funds, the ultimately goods. There are the really avoids the variety of the different securities the mutual funds are is the permitted by the sector or to the purchase. This is the somewhat limited by the objectives spelled out of the prospectus of the funds, which is the comprise of the great amount of the useful the information of on the funds and its the goals, while cash instruments, stock and the bonds are is a more the common types of investment that they the purchase the mutual funds might also the buy the exotics types of the investment like the forwards or swaps, the option and the futures. The investment of the objective of the mutual funds they explain the clearly and the types of the investment that the funds will the purchase and the examples. If you the funds object claim that is the what's attempting to the realize capital's appreciations or through the investing in US the company stocks the regarded list of their the amounts of the market the capitalizations, then it would be the US extra funds that the purchase US company stocks. Other mutual funds purchase the specified markets, the sector of the different industries, utilities, other technology, and is the financial, the service funds, and the examples for this is the such in the funds. Fund is called the sector funds or especially funds there are is also the bonds the funds that is the purchase the different the kinds of the bonds like the investor means the grade the corporates bonds or the high the else the junk bonds they can invest in the bonds issued by the governments agencies municipal parties or the companies. They might also be the divided up to the according to whether they are the purchase long term or short term maturities of the bonds. These are the funds may be the, also the bonds the stocks is the either is the domestic the companies or the global companies or they when the international companies the outside of the United States index. The funds are the another the type of the mutual funds that they attempt to the match the certain the markets index per funds are the another mutuals of funds that is the attempt to the match either certain markets the index the per performance over the times of the S and P 500 index is the end examples of on one, which is the idea index. The mutual funds are the based, which is the types of the index. The funds of the mutual funds would be the fund derivatives the based on the S&P 500 stocks index. The features of the could be the match in the index of the performance and the identically as the possible to help the investor the better they understand the type of the funds that they are the getting into the sector come out of the particular name of the rule of the 40 act of the that's the max of funds they actually invest in the minimally it's the percent of the securities at the securities that they actually match up the with is the there is the name. So the funds son is the funds call it the New York the tax the free bonds of the funds fund would have to use the 8% the more of his the funds to the purchase the investment of the tax free bonds that New York the state and its various the agencies the issues. Thank you for watching my video.